right? So they know that. So they're first making sure they don't know. How do they do that? They do it by asset allocation, right? They all have different asset allocation strategies, which at the most basic level is you don't put all your eggs in one basket. Most people put all their money in their business or their house, right? They know that that is the kiss of death. And so they look at how to divide their assets where they have a certain amount in a more secure environment, meaning not a lot of upside, but it's kind of like the nest egg, and they have some that are more at risk. And there's different, and I learned what theirs are, and I taught those different ones. But the most valuable one, I know you know, because I read it in your book, and I was really impressed, Asymmetrical Risk-Reward. Their entire focus is not about taking risks, right? There's only a few people. You think you're a billionaire because you took giant risks. Right? No. Maybe some do, but they don't usually stay billionaires doing that, right? How do they do it? They figure out what's the smallest amount of risk with the most amount of upside that I can do. And so Paul Tudor Jones's approach was 5 to 1. If I'm going to risk $1, I want to be certain I'm going to make 5. You and I, most average people, would normally think, I used to think, well, 12, 15, 20% return, right? But here's how it works. If I risk $1 and I'm certain I'm going to make 5 and I'm wrong, I'm down 1. I can risk $1 and still make 4. I can be wrong 4 times out of 5 and still be okay. That's how those guys become billionaires. Asymmetrical risk-reward. I was talking to a gentleman who in 2008, he took $25 million and turned it into $2 billion in the worst economic time. He anticipated what was going to happen with real estate. Everybody thought it was going to keep going up. He used synthetic bets and bet against it, made $2 billion. Brilliant job. And I said to him, what is the things that's missing for investors? He goes, well, the smartest investors are usually the worst investors because they want absolute certainty. They know everything before they decide. And by that time, the opportunity's gone. Mm-hmm. And he said, but the most important key for him was asymmetrical risk reward. He said, I think he said he risked 6 cents for every $1. He could have been wrong a dozen times, but he wasn't. That's how he did it, right? And then the fourth one is the obvious one we both know, which is diversification. But this is the real key. You know Ray Dalio is, right?
Yeah, I've interviewed him actually.
Yeah, so Ray's a good friend. One of the questions I asked him was, if we had to reduce it to the single most important investment principle to know. I mean, you're the Da Vinci of investing. No one has made more money than you in this area. And I said, what is it? Is there one? There's got to be one. And he goes, Tony, there is. He goes, I spent almost 9 years refining this, and it's so simple. So the holy grail of investing is to find 8 to 12 uncorrelated investments that you feel strongly about. If you find 8 to 12 of those, you reduce your risk 80% and keep your upside. In fact, you slightly enhance your upside.
Uncorrelated for someone.
Uncorrelated. Now, that's the hard part today because so many markets are correlated.
What does uncorrelated mean for someone that doesn't?
Well, for example, stocks and bonds traditionally are thought of as uncorrelated, meaning, stocks in a tough time, in a growing time, stocks are where you put your money, but bonds are to protect you when the market goes down. Unfortunately, doing most things like 2008 or 2020, they both go down at that time, but nobody talks about that. They just go, it's this weird thing. It happens regularly.
So things that don't move together.
That's right. They don't move together. Well, so much is tied together today. But the only way to really do it is you've got to have private investment, private equity, private credit, private real estate. You have to diversify beyond just stocks and bonds, and then you can get that across it by different industries, different elements. Because think about this. This will blow your mind. Private equity, basic private equity, not I interviewed 12 of the best in the world. Basic private equity has outproduced every stock market in the world for 40 years. Every single stock market in the world, every year for 40 years. Now, you don't have total liquidity. You're giving something up, but your returns are in a different place. They don't have to sell when things are tough. They take advantage. These are the smartest people out there. And they're not just trying to get alpha. They're building value, right? They take a company, they put AI in it, they bring new people to it, and then they take it to the public, or in most cases, they sell it to private companies. There are fewer public companies than ever. So I looked it up, and it was fantastic to see. The average S&P for 39 years was 9%. Nice return. If you put $1 million down, you'd have $28 million, 39 years later without doing anything. But if you put it in basic private equity has averaged 15.7%. Think about the difference of compounding that every single year.
Yeah, it's crazy.
Now it's worth $328 million. That's the difference between the same investment in public versus private. So it's finding these pieces. But when you do 8 to 12 uncorrelated investments, or more, reduce your risk by 80%. That's how you get higher returns and the same time, because most people are behind. And
You didn't come from a financial background.
No, I have no financial background.
You didn't study finance in university.
No.
So where did you learn all this stuff about finance?
By going to the very best on earth. Like, why would I go to university to a professor who's never done anything when I can go to 50 of the smartest people on earth? Or in private equity, I went to 13 of the smartest ones, the most successful in history.
Is your superpower learning?
Yes, I think that's what I tried to say to you from the beginning. That's what pattern recognition, pattern utilization, pattern creation is. If you don't learn at a rapid tempo in the world right now, you're cheating yourself of an extraordinary life.
Is there a tactic or a strategy to make me a better learner? Especially someone that does this podcast. I get to meet people like you, so I want to store everything in this time that we have.
Yes, I believe in immersion and spaced repetition. So I believe, like, did you take a language in school?
Oh, God, yeah, German.
Can you speak it?
9.
That's right. So most people go to college or high school and college and they take a language, right? And 5 years later, 10 years later, can't speak a word, right? Immersion is how you do it. So if I wanted to teach you a language and you had the time and money, I would take you to Italy and I would drop you in the middle of Rome and say, I'll see you in 90 days. Yeah. With no one to teach you in 90 days, are you going to be speaking the language?
Better.
You're going to speak the language. You're going to know the nuances of the language. You're going to have a pitch and tone that's more there because it's how you learned originally, by total immersion. So the reason I do 12 hours a day for 4 days, 50 hours in a weekend, or 60 hours, and most people think I'll never do that, but they're having the time of their life. So time disappears when you're enjoying yourself and you hate it. I mean, it feels like eternity. But the reason I'm able to do that is that immersion is like years of experience, and you're in a peak state while you're doing it. So you remember it because it's locked in, like 9/11 as opposed to 8/11. So I live that. The other thing that I do is I'm capturing, I use AI now to do it. I've kept journals my whole life, just like you, it looks like you've done, but I'm building on it. But I have my AI that I've been feeding over and over and over again, the things I wanted to remember, the principles, and I create structures to evaluate these things.
And I asked you there about how these wealthy investors make their money. The last question I really have around this is how the best entrepreneurs in the world make their money. Again, we're called the Diary of a CEO. So there's lots of entrepreneurs and business builders watching. And I know you've worked with many of the world's top entrepreneurs. In fact, one of them wrote you a letter.
Oh, which one?
Mark Benioff.
Oh, I love Mark. He's a beautiful man.
For anyone that doesn't know who Mark is, he's the founder CEO of Salesforce.
Yes. Yeah. He actually came to 4, I think, or 5 of my seminars originally in a row, same seminar. And, Mark's as big as I am. He's a big guy, and he was going for it full tilt. And finally, after the 4th one, he came up to me and said, "You've convinced me. I'm going to leave Oracle. I'm going to start my own business. I want you to come on the journey with me. It's called Salesforce.com. He said, we're going to change business around the world. And he said this to me. He goes, and I promise you, we'll get to $100 million in business. Now he's doing like 42 billion, right? So, but what I love about Mark is he's a contributor. He's a social CEO. Like, he does things for society. He isn't just about himself. He's an extraordinary human being.
He said, "Dear Tony, I'm so deeply grateful for everything that you've done for me over the last 4 decades. He talked about the seminars he'd been to with you and says that you've transformed his life through your inspiration and ideas. He talks about that particular seminar you referenced as the moment that led him to go deeper and deeper and deeper. He said, it was at Date with Destiny that I made the firm decision to leave Oracle and start my own company. We even had a brief conversation about it back then, if you remember."
Yeah, I remember.
Fast forward 26 years and Salesforce now has 80,000 employees and generates over 40 billion in revenue annually. It stands as the largest enterprise software company in the world. I truly could not have done it without you by my side. And as you always say, we often overestimate what we can do in 1 year, but we vastly underestimate what we can do in a few decades. Tony, I started this letter with gratitude, and I'll end it the same way. When I reached my most difficult moments, you were there. When I reached my highest heights, you were also there. I never forgot that whenever I reached out for help, you returned the phone call or text, always quickly. Business and politics are temporal, but relationships are eternal, and yours is one I carry with me always. Congratulations on everything you're doing. I look forward to a wonderful future with you. Aloha, Mark.
That's very beautiful. That makes me a little emotional. I love Mark. He's such a good man, and that's very kind of him to write that letter. He says he gives me more credit than I deserve, but I I love him personally. I love strangers. I'm driven by that, but I love Mark because he's such a giver. I see him as a role model of what a great CEO is, someone who understands the social impact of what they're doing as well as the business impact. He's got a heart of gold. And of course, we all have ups and downs throughout our lives. And he thinks he's just, I've just helped him. He's helped me too. It's like, it's never a one-way piece. It's not like I go around and coach all these people. I'm no idiot. I've learned so much from Mark. It's priceless. So I have to send that thanks right back to him. No question about it.
Where does that emotion come from that I see in your face?
I don't know. It's just like, I'm an emotional guy. I'm an empathetic guy, and I'm a lover. You know, that's what drives all that I do. And to see somebody I love and to see how far he's come and to know that I've been able to be helpful to him at key moments is meaningful. You know, it's extremely meaningful because he's provided opportunities for millions of people, 80,000 employees, but millions of people through his creativity and his focus. And we've done a lot of cool things together. I called him one time. I was up in San Francisco for other business. And I read in the paper that this landlord was kicking out these nuns who had the food kitchen in the worst part of the city there, in the Tenderloin district. And I was like, this guy's an idiot. I mean, I gotta do something. So instead of leaving, I spent an extra day and I went and met these nuns, most incredible ladies. And they were spending all their time cooking food so they could sell food, so they could make money, so they could actually prepare food for the homeless there. And in this tiny little building, and they were getting kicked out. So I called the owner and I said, listen, I own a lot of real estate also. I understand your rights as a real estate guy, but I said, do you want to be the most hated guy in San Francisco? I said, I'll give you an option. How about let them stay to the end of the year. I'll pay their lease. I'll pay twice the amount, and then I'll get them out. I said, but you don't push them out now on the street. So he agreed. And so then I said to ladies, let's find a place for you, and I'll help you find a place. We'll rent a place for you. And then I started getting phone calls, and one of the phone calls I got was this realtor, and he goes, they're looking to buy a place. And I said, well, where are they getting the money? They said, I don't know. So I called the main nun up, and she goes, I said, I'd pay for a place for you guys for a year, lease you a place. I said, but I hear you're looking to buy a place. Do you guys have some capital I'm unaware of? And she goes, no. She goes, God will provide, Tony. Like, God will provide. So I spent, $1.2 million, something like that, to find them a place. But then I called Mark because I didn't want them living in the place.